For some of them, they just like the game. They just like playing. And so if they can throw $1 million into something and turn it into 2 million, they're going to do it. And if they lose $1 million, it's literally not going to affect them at all, because these are people who are used to seeing their day-to-day net worth fluctuate by millions or even tens of millions of dollars.
Hey, podcast listener, even if you are alone in your entrepreneurial journey, know that today, right now in your earbuds, you are joined by thousands of entrepreneurs from all around the globe seeking to grow better, more profitable, location-independent businesses. If you'd like to learn more about what we do and download our entire back catalog, check out tropicalmba.com.
Happy Thursday morning, everybody. Welcome back to the podcast. Shout out to the American listenership listening to this in your red, white, and blue earbuds, no doubt. And shout out to everyone who sent us emails the past few weeks with ideas, frameworks, concepts about how we can continue to talk about those gradual improvements that add up over time and result in fantastic businesses. Ian and I have so many topics to cover for the rest of the year, and a lot of it's thanks to your emails. So I'm just looking forward to all the episodes we're going to be doing in the coming weeks. This week is about a book that got delivered in my mailbox a few weeks ago. I sat down in my chair and I did not get out of my chair until I finished reading this book. It was a one-session read. It is an incredibly exciting book, and we're going to talk to the author today. The title is Crypto Confidential: Winning and Losing Millions in the New Frontier of Finance, and the author is Nathaniel Eliason. Now, Nathaniel happens to live down the street from me, so was able to deliver me a preview copy. And I believe the book comes out next week. And I couldn't recommend it more. It's a super, super fun read. And I want to just give you a little bit of my personal backstory here. A lot of us in this community are crypto investors or own some kind of crypto because we've been around for a while. And something interesting happened in 2021. And that thing was all of a sudden our crypto accounts started going up like crazy. But a second thing happened. I started seeing people that I knew for many, many years start to close the laptops on their business. And I started to see people that I knew, founders that have been running businesses for many years, essentially stop doing that and focusing full-time, and by full-time, I mean like 16 hours a day, on crypto-type activities, crypto trading, crypto farming, crypto coding. And I heard all kinds of stories from that. I heard of people making retirement levels of money. I saw people buy homes. I saw people get completely wiped out. And Crypto Confidential, this book, talks about the backstory of all that. Nat jumped right into that world at the time. He had time, he had interest, he had some money to invest, and he jumped right in and wrote this kind of liar's poker of a book, like a Michael Lewis kind of book, like a Gonzo book. He jumped into the world. Some crazy stuff happened, and thank God, someone sat down to write the story of this crazy run in crypto in 2021. Some people called it crypto summer. So we're going to jump right in with Matt. I really enjoyed this conversation. So without further ado, we're going to roll this interview. Yeah, I first want to thank you for writing the book. I remember living through this time and thinking, somebody's got to write this book. Do you remember the moment when you thought that?
I do. During the whole crypto mania, I was writing these articles and trying to explain bits of what was going on in it to people on the outside. And they were getting a little bit more popular. And then one of my friends who does a lot of financial writing DM'd me on Twitter. And he said, some of the things that you're writing about, people stacking leverage on leverage on leverage and creating these crazy new derivatives to get these crazy optimized yield situations. He said it actually reminds me a lot of what people were doing in 2008 and some of the stories you heard about all of those financial shenanigans. And he said there's probably an interesting book or something in here. And that was like February of 22.
Yep.
And that kind of first planted the seed in my mind. And I actually had a tweet shortly after that where I said, my goal for this crypto cycle is to live the rest of it to the max and then try to write like a Liar's Poker, Chaos Monkeys X book about this period. A few months later, things started going south and I started reaching out to agents and kind of figuring out how I was going to do it. And 2 years later, here we are.
Here we are.
Yeah.
One of my favorite parts of the book is that you put a clear timeline. So at every chapter, it starts like April 21 and ends at like May 22.
Yeah.
I'm thinking where I was because we happen to be neighbors.
Oh, that's a good point. Yeah.
And I think
we didn't realize how close we live to each other. I literally go by your house, or I'm within like a 0.1 mile of your house 10 times a week. It's so funny.
It's amazing. I'm pretty sure I know 5 people in the book, and it's pretty exciting to follow along and to think about how much FOMO I had at each individual month, because there was this movement of my friends, probably 10 people that I'm close with, kind of quit their businesses and focused full-time on trading. Can you bring us to the moment when you decided, hey, I got a bunch of stuff going, but I'm going all in on crypto? What was it about the moment? What was the piece of information that brought you into this world?
It was a couple of things. One, I was feeling the exact same FOMO you were. There were these people who I knew from the internet entrepreneur, internet marketing, creator economy, influencer world who seemed to be quitting their jobs, or at least putting them on the shelf for a little bit to go all in on this crypto stuff. And I kept seeing them post things about it and charts of these coins going up and things. And I kept feeling like I'm really missing out on something here. And what made it worse was that I didn't really have a big thing I was focused on at that point. I'd been doing a marketing agency, but I had left that. I was trying to learn programming and trying to like figure out my new career. And there was just all of this supposedly free money floating around on the internet if you knew how to get into it. And we had our first kid on the way, my wife and I. And so I was pretty stressed about getting my work stuff figured out before she was born. And the plan had been to figure out programming well enough to get a programming job. I've always enjoyed programming for fun, but never really been able to explore it. And so I'd started down that path. And then, man, I just kept seeing the tweets and I kept seeing people making money. And I was like, all right, you know what? Even learning programming is too slow. I'm going to go try to do the crypto stuff and see if I can make a bunch of money that way first. And then maybe come back to like having a real job after that.
One of the coolest things about the book is how you include your family in it along the way. And that's like really affecting. What does your wife think of her inclusion in the book after the fact and all the stress that you brought onto you? You really beautifully share how much stress it brought into the household that you essentially became a trader for a year of your life.
Yeah. I mean, it did take this really big emotional toll on me and a really big toll on our relationship. And I definitely could have just written here's what's going on in crypto. Here's how to maybe make money on it. Here's what to look out for. Here's how this stuff works. But I really felt like, one, that would be out of date immediately. And two, these are ultimately all personal stories, right? Like everybody was living through it as a full person, not just a trader. And there were these pretty awful consequences for a lot of people who got as sucked into the world as I did. And something that I felt it was important to capture that. And she and I talked about it because we knew other couples who had had a lot of relationship challenges through that period, usually from the guy getting completely obsessed with this world, in many cases, ultimately losing money on it or getting distracted from their job or other work and the tensions that created. And it felt like it was really important to capture that too, because I think it makes the story more relatable. I think there's a lot of other people out there who feel a similar level of maybe shame or embarrassment or regret for some of the ways they behaved during that mania. And that's okay, right? Like you're not alone. A lot of us feel that way. And I kind of wanted to put that part of it out there too.
It's fascinating. You mentioned The Liar's Poker, Big Short. I saw the first book review that went up on YouTube actually related it directly to The Big Short.
Yeah, from Cam. Yeah.
And the Liar's Poker analogy really resonates with me because there's part of me that's like, oh yeah, that's very stressful. And then there's part of me that's like, sure sounded fun.
Yeah. Yeah, it's like both. That's sort of the complicated relationship with it is, yes, I was setting alarms in the middle of the night to wake up and check positions on the off chance that something blew up while I was asleep, and was just locked into my phone and Discords and all these things 24/7. And it was incredibly stressful and taxing, all of these things. But it was also kind of fun. Like there's a reason that we all kept doing it. It was a pretty challenging relationship in that sense. it was important to highlight the downsides too, because when the FOMO starts during this next cycle, there's going to be a lot of that illusion from the outside that you just hop into Telegram and you start printing money. And it's like, no, 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 no. There's a price that you have to pay here with your sanity. And you've got to be ready for that side of it too.
I was hoping you could bring me through your meeting with the character you call Quinn.
Yeah.
And how that led to someone stealing $35,000 from you. And these are entry-level numbers that you're going to get to in Crypto Confidential. Because as much as this is a tech world and you got into programming and all this kind of stuff, ultimately, it seems a lot of these Genesis stories revolve around meeting the right person at a cafe, and they sort of whisper something across the table from you, and it piques an interest.
Totally. The thing I was really kicking myself about at the beginning of the story is I had this friend, Quinn, in Austin, and she had gotten into crypto almost a year earlier. And she had told me about it. She said, hey, I'm starting to play with this DeFi stuff and these new projects on Ethereum, and it seems really cool. And she talked about it a little bit. And all of the scam alarms in my brain went off. And I just thought, you're just going to lose a bunch of money. This is silly. I shouldn't be putting any money into this. Then fast forward 8-9 months, she's one of these people that I'm seeing post on Twitter about these projects that she got involved in 6 to 8 months ago when I wrote it off that have now suddenly shot up to the moon. She's talking in this lingo that I don't understand at all, but I was close enough with her that I could say, hey, what the hell are you doing? What is this? Is this real? Because where I was, where a lot of people were, which was, hey, Elon's talking about Dogecoin. That's in the news. You can day trade it on Robinhood. You can buy crazy out of the money options and see if you get a quick win. And that's serious day trading, right?
Yeah.
Just basically gambling. And it seemed like she was doing something else that was a little more really in crypto. And so I asked her about it, and she introduced me to this world that was going on back then of farming new token launches. So farming is this interesting term in crypto because there's a good version of it, which is a new project launches. They want people to use the project. And so they set aside some number of tokens for early users. And then by using the platform, you might get some stream of their tokens, right? Imagine if every time you uploaded a picture to Instagram, you got a share of Meta stock, something like that, right? That's
Right.
the good version. That's cool. That's a great way to drive adoption. It's not really any different from Uber giving out free Uber Eats credits when you sign up for the app. And so that had been going on for 6 to 8 months. And then a bunch of people realized, well, we don't even need to build a real product. We could just put up a website, put up a token, and say that if you temporarily deposit some of your crypto in our site, we'll start giving you our token. If you then take the tokens that you're getting from us and redeposit them, we'll give you even more of our token. And basically, it turned into this game where everybody was competing indirectly to see how many of the tokens they could get as quickly as possible to sell them as close to the peak of the price as possible before everybody else started selling and the price went through the floor. And these degenerate farms would pop up. They might get $100 million deposited into them in the course of a day.
Wow.
And then 2 days later, they would be back down to almost zero because people just ride it up, try to sell the top, hope you made some money based on when you got in and how quickly you compounded your tokens. And then they'd get out and run off to the next one. And there might be, when we started, Quinn introduced me to it and I brought another friend along and we were all doing this. And there were 1 or 2 launching a day. So you knew it was coming out, you could hop in, you try to get out at the right time. And we would often make money because Quinn had some connections. So she knew when things were coming out a little bit before other people did. But after 2, 3, 4 weeks, more and more and more of these things started launching every day, where suddenly there were 8, 10, 15 launching per day. And so all of the money was getting kind of spread out across them. None of them were super lucrative anymore. And it was getting harder and harder to make money off of them. On top of that, every single one that you got involved in might be a trap, right? It might be a rug. They might just take all of your money. So one of the stories in the book that ended up happening is me and some other people who I was doing this with were in something similar to one of these farms, and it ended up being a trap, and it basically wiped out everybody except me. I just got stupid lucky. I think what happened is I got distracted by a conversation or something. I forgot to do this final step in this process to use this farm. So I never completed it, but everybody else did. And that last step was the one that opened you up to getting scammed. And so I didn't lose any money there. But then literally a week later, I've decided, okay, I'm done with farming. It's way too risky. I'm picking up pennies in front of the steamroller. I shouldn't be doing this. I'm going to get back to programming, because programming, if you join a team and you get paid money, then there's like a floor, right? You're at least going to get this much. You're not going to go negative. You're not gambling with a ton of your own capital. And so I should go back to that plan. I got too cocky. So I start doing crypto programming, and I build my first little crypto app. And I'm so thrilled, so excited. I put it online. I publish the code on GitHub so that I can show it off when I start trying to get a crypto job. I go out to dinner with my wife to celebrate. And then I come back and I look at my crypto wallet and it says 0 ETH. And I'm just like, well, that's weird. There wasn't very much ETH in here, just a little bit so that I could do a couple of things, but it shouldn't be 0. And I'm like, maybe I messed up deploying the contract right before I left for dinner. And so I open up my transaction history, and there's all of these other transactions that I never did. I don't even know how to describe the terror that went through me at that moment, because it was just so awful. It was basically like opening up your bank account and just seeing somebody sending all of the money in your bank account off to themselves. And they'd been doing it for the last hour while I was at dinner. I just immediately freak out. I can feel my heart in my head, everything. And I called Quinn and I'm like, I need to send you everything right now. And Quinn is like, yeah, here's my crypto address. Send me whatever's left if you can. Hopefully we can protect it. I'm trying to send it, but the hacker, because they've drained my wallet, I can't pay the tiny transaction fee to send Quinn the rest of my crypto. And what the hacker was doing was they were keeping my balance at 0. They were sending in a minuscule amount of ETH, sending themselves more of my money that was in other places, and then removing the leftover ETH. And they would do it all in one transaction. So there was never enough in there for me to send my money out. And then I'm like, okay, cool. I just got to get more crypto in the wallet so that I can do these transactions. Quinn sends me a little bit. As soon as it gets there, it immediately disappears. They had some code running on their end to automatically shunt out any crypto that hit the wallet. So I was just like, okay, I'm like what I did is I literally had to sit there and watch as they took 35 grand out of my wallet, and had already taken a good chunk of that. Again, just like stupid luck. The only thing that saved me was that I had put some of my crypto on a different blockchain, which used the same seed phrase. It was the same wallet, but because it was on a different blockchain, I don't think they realized it was there. And so I went to that one, which was Polygon instead of Ethereum. That money was still there. And I'm like on the phone with Cleaner, and I'm like, holy shit, like it's still there. I got to send you everything right now. And I'm like queuing up these transactions, doing the absolute max you can spend on the transaction to get it through as quickly as possible, because maybe they'd realize it was there as soon as I started doing it, and they didn't. So I ended up saving some of the money. But the 35K was more than I had made in the last month or two of doing all the farming, doing all this work. It set me way back behind where I had started. And it was just like, man, what the hell am I doing here?
As a reader, you feel that. And I want to get to what happened next, which you upped the ante. But I'm curious, a lot of us remember the ICO craze, where a lot of white papers came out and people sort of contributed to projects. I'm curious about what was different about the mechanics of farming. How do you farm? What were the toolkit you used, and what did the process look like?
The ICO craze was the big mania in that 2018 period. And with that, a team would basically put up a site. They might say, hey, Tropical MBA is going to launch the TMBA token, and you can deposit 1 ETH and we'll send you 1,000 TMBA tokens. And then they would take some of that ETH, and usually they would try to get the token listed on an exchange. But if they couldn't do that, there might be like some secondary markets and things where you could try to sell your ICO tokens or the tokens that you bought. But it was this kind of like transaction. You put up a website, you said, hey, give me ETH, I'll give you this new token. And we're going to use all the money that we raised to build this new app. It's an initial coin offering instead of an initial public offering. And some of those worked out great. Some people got into the right ICOs and made a lot of money, but most of them they either went to nothing. I actually got an email a couple of months ago from a class action lawsuit against one of the teams in 2017 that I invested in the ICO, and I got like $20 back or something, right? Like I put in a lot more than that, but That happened. And then there were a bunch of these lawsuits. And it became pretty clear that it was basically an unregistered sale of a security, right? Pretty explicitly illegal. And so teams don't really do that anymore. To the extent they do an initial coin offering, it's usually accredited investors. It's a closed thing. Not anybody can be involved in it. A lot like doing a seed round for a startup.
Yeah.
So where farming came in was that companies realized that if they couldn't, well, not even companies, right? People who wanted to do this casino side of the game realized that if they couldn't just directly sell tokens, they could instead create one of these farms where you're not buying the tokens from them, you're participating and getting tokens for free. And so instead of deposit 1 ETH and get my TMBA token, you say, hey, we're introducing the TMBA exchange where you can swap your cryptocurrencies right on our site. And so if you provide a bunch of, say, Ethereum to the TMBA exchange, I'll give you 1,000 tokens per day per 1 ETH that you contribute. And I can always withdraw that ETH back. I can always take it back. But as long as I leave it with you, I'm getting a steady stream of tokens. Now, you would probably only set aside 10% or 20% of the total supply of the tokens, and you would keep the rest of them. But now I'm getting some of these, and so I can go to one of these decentralized exchanges and I can sell them to try to make some money off of them. And as your farm is gaining popularity, people are going to go buy the TMBA tokens on the market so that they can put them back into your exchange so that they can try to earn more tokens. It's just like if anybody's played any of those idle farming or idle miner or cookie clicker style games where you tap the screen a bunch and then you get some money and then you invest that in a thing in the game to get more for each of your taps. It's exactly like that, but with cryptocurrencies. And by doing that, they got around the concerns about ICOs because they're just giving the tokens away. But you at any time could take the tokens that you still have and go sell them on the market and you can still make a bunch of money. Or because you launched it, you could be the first person to put some ETH into it. You'd be the first farmer. You'd be getting the highest reward rate for a period before it gets diluted from everybody else coming in. And then you would have all of these tokens that you could go sell in the public market too. So the people launching these were making, a lot of them were probably making a lot of money. And a lot of people wanted to participate because it had this kind of fun casino, poker, game of chicken aspect to it, where if you got in at the right time and got out at the right time, you did really well. And even if you lost money, you knew there was another one launching tomorrow and you could try again. And it created this fun casino game for a lot of people. The problem was that eventually more and more unsophisticated money came in that didn't realize it was kind of a game, especially when it started getting used by more legitimate projects where it wasn't explicitly just a farming game.
Interesting. So the farming mechanism of building an exchange and offering tokens, they didn't start out with like a legitimate marketing message as to why we were doing this. It was purely for funsies.
The first ones who started doing it had legitimate messages. It was really pioneered by, I think Compound Finance was the first app to introduce this. And they were a lending protocol where you could deposit your ETH into Compound, and then you could borrow USDC or wrapped Bitcoin or something else against the ETH that you had deposited.
Gotcha.
And if you deposited your ETH to Compound, you might earn like a 0.5% or 1% or 2% interest rate on your ETH from the other people who were borrowing ETH from Compound. So, I mean, very similar to how a savings account works. The bank pays you a little bit of interest from everybody else borrowing the money that you've deposited at the bank. What Compound then did is they said, you'll get your 2% or 3%, whatever in ETH, but you'll also get an extra 2% in Compound tokens. You'll get this like small little bonus, and this is how we're going to get our tokens out into the wild without doing an ICO. And that was great because they weren't giving out an absurd number of these. It was very slow. It was very steady. You weren't getting these crazy APRs. It was just a little extra bonus, right? A little extra incentive to use their app. That was great. Totally above board, honest, well-intentioned, great way to attract users. What people eventually figured out is that you could launch another decentralized exchange, or it usually wasn't lending protocols. It was usually a decentralized exchange. And you could pay somebody on Fiverr or $10 to come up with a logo. You could use one of the open source kits for launching a decentralized exchange that you could find on GitHub. And then instead of setting the bonus interest rate to like 2%, you could set it to 2,000% and just stream out tons of these tokens. And that's what made it into this like 2, 3, 4 day affair, because you would put in $100 of USDC and you might get $300 worth of their tokens in the next day, assuming the price held steady.
Right.
But obviously, the price would kind of shoot up as people got excited and then crash just as hard. This is a really common theme in crypto, is that there will be a great idea, a really cool new innovation like Bitcoin and Ethereum, decentralized exchanges, lending protocols, NFTs, that starts as this legitimately cool new innovation. And then people see that innovation get a lot of attention and a lot of money. So they start copying it, making their own version, appealing to the people who missed out on that. And the more it gets copied and the longer the game goes on, the copycats get, until there was a point in the farming period where people didn't even launch websites. They basically just put up a link to the smart contract on Ethereum, which you had to open in like a blockchain scanner. And then you had to send in your money that way. And then you could see the APR you were earning in like plain text, right? I mean, literally no website. And those ones lasted for a couple of hours, but people still played because that was just like how ridiculous the game got as things went.
What do you suspect the marketing plan was? I'm curious as to like who these exchange masterminds were. Was it a group of kids in some European country tossing up a project? And then how do they push it off the edge to get people like you, the investors, the gamers, interested?
That's a great question. I've wondered a lot about who was launching these much more low effort ones, because if you told me that it was 5 people just doing it over and over again, I would totally believe you, because so many of them looked so similar. And there was something that came out about Solana during that 2020 period where one guy had launched dozens of the copycat apps, and he just had this playbook and he kept launching them and kept attracting money from it. And so it seemed like there were all these people launching projects, but it was really like just him doing it. And it's hard to say because it was always an anonymous team. You never really knew who was doing it at the most degenerate end. And then in terms of attracting capital, there were sites that you could go to. The one I mentioned in the book is called VFAT. It's just VFAT.tools, and the site's still active, where you could see every way that you could earn yield, earn interest on your crypto across all the different blockchains. And they would kind of just list anything. So if you had some new farm you were launching, you could submit it to them. And then there were people like me who checked VFAT every morning for any new thing launching, checked the APRs, and then just threw money into it to see where it went. So that was kind of all they had to do from a marketing perspective.
It's incredible. You have this great quote in the book, buy the rumor, sell the news.
Yeah.
I mean, you're going to a place with no website. You're just looking at some basic stuff on the web. Was it pure rumor that you decided this is the place that I'm going to dunk a bunch of money into? How did you get the confidence to do that?
It was a combination of things. You hear about things through Discord and Telegram. And I say this in the book too. If you're hearing about things on Twitter, you're probably too late, unless it's a big, legitimate project. Now the new thing is coins, usually on Solana, right? There's new coins launching every day and people are just going crazy over them. And if you're waiting until you hear about it on Twitter, you're probably too late, because you've got to be in the Discords, in the Telegrams. You've got to know the people who are really on the front lines of this stuff so that they share that knowledge with you. And so the first question is, okay, where did I hear about this from? And if I heard about it from like a pretty trustworthy person, then I'd feel much better about it. But obviously they get scammed too, and they make mistakes too. And so part of it as well was just like literally a sixth sense from doing it a lot, being able to really quickly look at it, look at the site, look at how they'd configured things for how the token was going out and whatnot, and then having like a gut feeling about how it was going to go. And oftentimes it would be, there's this great section in The Alchemy of Finance by George Soros, where he talks about his investment strategy, which was whenever he heard about something remotely interesting, he would just throw money into it, because once he had money in it, then he would be incentivized to go do more research. So we would just throw money into almost anything a little bit. And then that would be the pressure to like, okay, now I'm going to go look at this a little bit more. And then based off that, either pull it back out or put more in. But it was really just like a vibe, for lack of a better way to describe it. And that's why I tell people too, if you want to try to run this playbook back, if you read Crypto Confidential and you're like, that actually sounds kind of fun, I'm going to try doing something like that this cycle, you have to be full-time in it. You've got to be 12, 14, 16-hour days glued to your computer and your chats, because that's the only way that you'll, one, know when things launch, but more importantly, know when you need to get out. Because it's actually easier to buy at the right time. It's really hard to sell at the right time. And so if you're not going to go all in, you're going to forget about things, you're going to get distracted, and you're going to probably end up holding the bag at the end of it. It's really hard to do it halfway because that vibe and intuition are so important to success.
I remember having late night chats at bars and cafes, probably the same ones in the book, with people in this world. And that was the exact thing that kept me out of it, because I had a business to run.
Yeah.
And they were like, look, you have to do this all day long, and it's freaking fun and crazy. I'm curious about that social onion of Twitter being late, and you peel it back and you go a little deeper into a Telegram or a Discord. What was it about the people towards the center? What put them in the center? What did they know that the less sophisticated investors didn't know?
Usually it was one of two things. One, they had been playing the game a lot longer, so they just knew everybody else in the space. And people in the space, one, they like making money, and they like making money with their friends. And so if you have a lot of friends in the space, then you're going to naturally get better and better information. And the longer somebody's been in it, the more kind of trust they have. And there's also a lot of value on influence and capital. So if you really want to get access to the best information, you either need to have a huge amount of money to throw at things, which I didn't have, or you needed to have influence in some way. And what I started doing, and I wanted to include this in the book, but it ended up having to get cut, was I was writing all of these articles explaining crypto stuff to people outside. And they ended up doing really well, because I realized my competitive advantage wasn't trading. It wasn't money. It was that I was decently good at explaining things to lay people. And so the more articles I wrote about crypto and about this side of crypto, and the more popular they got, I started getting in to more of these chat groups. I started getting invited into things more, because I was now a valuable person to have. Because if I liked a project, I might write about it, and that would bring more people into it.
You would move the needle.
Exactly. It would move the needle. And the thing I ended up realizing, and that made me feel, I don't know the right word, it's just kind of weird, or what was unfortunate about being in that position, was that my threshold for putting money into something was much lower than my threshold for writing about it. And so what kept happening multiple times is I found out about something relatively early. I put money into it. It started doing really well, and I gained more confidence in it. And then I wrote about it a month or two later. But that was too late, because the time to get in was when I had gotten in. And by the time I wrote about it, it was often near the top. If you go back and you read some of my old articles from the period, when I wrote about a project was often like the best time to sell it. Because
you were the news.
I was the news. If I had heard about something in a Discord and had thrown some money into it, I did not have the confidence to write about it, but that was the time when I should have written about it to actually be helpful. And that was part of why I ended up kind of stopping writing about projects, is I realized that disconnect actually makes me almost harmful to the people reading it, because by the time I'm confident enough in it, it's kind of hit its peak and people shouldn't be buying into it anymore. And that was true for a lot of people in the space. And so that's why it's like somebody posting about stuff on Twitter, sometimes they're trying to get you to be their exit liquidity. They're trying to get you to come in and buy it so they can cash out. But other times it's that same thing that I just talked about. They're finally confident enough to talk about it publicly, but that's when all of the other money is rushing in, and you should probably be getting out. So that's the problem with waiting for those big signals for things.
Right. It's like bar rooms, not blog posts.
Exactly.
That's the heuristic. Yeah. You mentioned like this March, April 21 timeframe, that some of these projects are seeing like $100 million. Did you say that number?
Yeah.
Okay.
Yeah.
I'm asking you maybe to speculate a little bit here, as I have some other friends. Who was that money? Because we are on some backwaters of the internet here. where there's lots of rug pulls, lots of liability in being involved. Who's hanging around with these big bags of money willing to toss them into this stuff? Because these aren't just a bunch of guys like us in Austin cafes. There are some serious hitters involved.
Yeah.
What do you suspect were their motivations and how they got involved?
From what I could grok, it was people who had been really, really early, who had hundreds of millions of dollars in crypto and probably didn't have a good way to off-ramp it. And
what's off-ramping?
Oh, sorry, like turn it into cash in their bank account. They didn't have a great way to just like...
Because that's a taxable event.
Taxable event, the wallet might have been anonymous. If they were really early, the wallet might not have been attached to their, like the IRS knows which wallets are yours if you've ever interacted with Coinbase and things like that. But if you have a really early wallet from the Ethereum days and you bought the Ethereum launch or shortly after, there's plenty of people out there who have tens of thousands of ETH, which is worth, hundreds of millions of dollars and whatever, who there's nothing linking their legal identity to that wallet. So they have all of this money out there that they can't do anything with right now, kind of except play with it, which is a crazy situation to be in. But these people exist. And for some of them, they just like the game. They just like playing. And so if they can throw $1 million into something and turn it into 2 million, they're going to do it. And if they lose $1 million, it's literally not going to affect them at all, because these are people who are used to seeing their day-to-day net worth fluctuate by millions or even tens of millions of dollars. And so they'll just move it in. I remember during some of the peak of the farming days, you could see what Sam Bankman-Fried's team was doing with their crypto because you knew which wallets were theirs and things. And there would be single transactions where they put tens of millions of dollars into things just to farm the tokens. And they might even be putting in Tether or USDC that they had borrowed against their ETH somewhere else. And they borrowed it just so they could go farm this other token. And it was wild to watch, but they would just do it casually. And some of these guys would do a 10 or even $100 million transaction without even doing a test transaction first. It was insane just how casually some of these whales treated the money. It was literally like Dave & Buster's tokens.
Let's revisit then. You just got stolen $35,000. Of course, this is where the book ends. You pack it in. And
short story. Yep.
Your lovely wife, you go back to her and you tell her, look, I'm making a job.
Yep. I went to work at McDonald's.
How do you get back on the horse after you just lost $35,000 of your family's money? What is that socially like? And then what was your next step?
Yeah, two things happened. One, just obviously was feeling awful and super sorry for myself. And I had been on Twitter and had a blog and had a bit of a following and whatnot. And they knew I'd been getting into crypto stuff.
Oh yeah, you went viral with all right, so time for a very painful story.
Yep. Yeah, it was crazy. I wrote a Twitter thread. I said, hey, look, this just happened to me. It's going to happen to someone else. And here's the mistake that I made that lets somebody steal 35 grand from me. And if you've done any programming, it's hard to imagine how opaque the Ethereum programming world was back then in early 2021, because the programming language for Ethereum is called Solidity. It's very similar to JavaScript. It's not that hard to pick up, but so few people knew how to do it at a high level that back then, there were not really any programming courses on it. There was like one on Udemy. There were no boot camps. There were no coaches on Code Mentor or anything. There were hardly any Substack responses to Solidity issues. If you wanted to learn it, you were very on your own. Whereas if you want to learn any popular programming language today, there's a million courses you can take. There's infinite, ChatGPT can do half of it for you, right? And now you have a lot more of that for Solidity, but you didn't back then. So you were really in the Wild West of programming. And on top of that, with Solidity programming, there's always money on the line because you're dealing with crypto. And so if you screw up, you might accidentally drain your wallet, or you might deploy a smart contract, a block of code on Ethereum that has an error that lets somebody go in and take all the money out of it. It was this very high risk profession, which is why teams were willing to pay so much for good Solidity engineers. And that's why I wanted to learn how to do it. I mean, and it was just a horrendous error. I put my seed phrase, basically the password to my wallet, on GitHub by accident when I published the code.
Yeah.
Just incredible rookie mistake. But I
Great
I
for
wrote
the
this,
book, though.
great for, oh my God. There were just the stories like that happened over that time period. You almost couldn't have come up with better stories for a book, right? It's the one redeeming factor of some of those events. So, I did that and I wrote this thread about it. And I started getting all of these DMs and all of these Discord messages from other Solidity engineers who were working at huge companies, who had these awesome jobs I was aspiring to, who had done basically the exact same thing or done something really similar to it, or had made some other careless error. They'd been scammed in some way. And the number of stories was just overwhelming. It was like, oh my God, okay, I'm not as dumb as I feel. This is a common story, and it's almost like a rite of passage. It's a gauntlet that you have to go through if you want to play in this world.
Yeah.
Because after you do it, you take the security and the strictness way more seriously. Like, you really understand what's at stake here. In some ways, it was a blessing that it only happened with $35,000, because some people got that lesson working for a team and making an error that lost the team millions of dollars or tens of millions of dollars, right? These hacks happen all the time. I was getting all these messages from engineers saying, like, don't be too hard on yourself. It sucks, but this happened to me too. Keep going. Don't quit. And then I go out to this cocktail party with a few other really, really deep in the trenches crypto traders. And they're also telling me all these stories about them losing comparable amounts of money on scams, hacks, losing their private keys, just any way you could lose money, they had lost it. But they were all still in the game. They were all still doing it, and they had made all of that back and more. And now, obviously, anybody who's ever been within 10 feet of something about mental models knows that there's like a horrible survivorship bias here, right? Because for every one person who loses a huge amount of money and then doubles down, goes all in, and gets a good outcome out of it, there are probably tens and hundreds of people who double down and then lose even more, right?
Yeah.
But I kind of had the naive confidence from all of those stories that I said, okay, you know what? Screw it. We're going to actually go all in here. Like, I'm going to take the rest of the money that I had set aside for this, that I told myself I wasn't going to touch. I'm going to touch it. I'm going to put all of that on the line. I'm going to try again. I'm going to figure this out. And then the story kind of like really took off from there.
Yeah, this is like the moment in Rounders, one of my favorite movies. Like, you're in the delivery truck doing the right thing, and then you meet some people and you're like, man, I got to go to Vegas. I got to get back to the big game.
It's Casino Royale. Like, Bond has just lost all of his money, and he's like begging the team for more so that he can go back and win. I say this too, that's not necessarily a smart thing to do, but sometimes it works. Right? Like, it's hard to know.
There's a story right before you started developing CryptoCraft, which is the Titan story.
Yeah.
And you have this line in there, this quote, our little ragtag team of crypto speculators had turned Mark Cuban into exit liquidity. Who's the shark now? What's the story of Titan? So this is when you jump back in after the dinner?
Yeah, this is right after I jump back in after the dinner. And this is where the DeFi farming started to get into kind of a problematic place, because you had all of these clearly no product speculative casino game farms launching with crazy APRs that people would put money into and quickly pull it out, try to make money off of. And then this new project launches called Iron Finance. And what they were trying to do was create a stable coin, a cryptocurrency pegged to the US dollar that wasn't backed by dollars in a bank account and wasn't entirely backed by big name cryptos like ETH and wrapped Bitcoin and USDC and other things. They wanted to create a stable coin that was backed 75% by USDC, so effectively dollars in a bank somewhere, but 25% by their project's token called Titan. And so as long as Titan had some value, you could convert Titan with some USDC into their Iron stablecoin, and you could convert your Iron stablecoin back into Titan and USDC. And Let's take another example. There's a lending protocol called MakerDAO, and they create a stablecoin called DAI, DAI. And you need to create $1 of DAI, you need about $1.60 of collateral, usually Ethereum, wrapped Bitcoin, like big tokens. Iron was saying you only need $1 of collateral, so it's a little more efficient, and 25% of it is our token. Neat idea, and a version of it was already running successfully. But there was obviously this risk that if something really bad happened and the Titan token went so close to zero to effectively be worthless, that your Iron stablecoin would only be worth 75 cents. It wouldn't be worth $1 anymore, which is not what people expect when they buy a stablecoin. And anybody who's remotely familiar with the last crypto cycle knows that this basically foreshadowed what eventually happened with Luna and Terra, except that was way worse because the Terra stablecoin, UST, was 100% backed by the Luna token. So when the Luna token went to zero, a Terra USD, the Terra stablecoin, was also worth zero, right? A complete wipeout.
Right.
So Iron launches, and when they launch, they put in these maximally attractive, borderline degenerate DeFi farms, where if you make their Iron stablecoin, their Iron USD, and you put it into their app, you were making something like 2 to 4% per day on the stablecoin. 2 to 4% per day in something pegged to the dollar, right? It's just like, oh my God, that's incredible. Like, who wouldn't do that? And then if you put their Titan token in, it was like 20% a day. And so they launch and everybody's seeing it and they're going, oh my God, it's degen farm level rewards, but with a real project behind it. This is the best of both worlds because there's actually something here. This could be a real app that people actually use, and it's just printing absurd amounts of money. And so I take a lot of the money that I brought back on the table and just throw it all in. 20K into the stablecoin, 5K into the Titan token really, really early when the Titan token's at like $3. And over the course of the next 2-3 weeks, the Titan token goes from $3 to $50. So almost a 20x. We're getting this 2 to 4% per day on the stablecoin all the way. And the token is just a line upwards. The price is just not like no deviations, nothing. And we're all talking nonstop because I had just lost all of this money. A bunch of other people had just lost a bunch of money in the scam. We all really needed a win. And now we have this just incredible win, right? There's a point as it's reaching its peak where all of us are making thousands of dollars a day from the appreciation, the interest, everything. It's just incredible. And then it starts to leak out into the public. It starts to go beyond just the crypto degenerate gambling crowd. And you start seeing other people who are kind of like crypto adjacent on Twitter being like, hey, what is this Iron thing? What's going on over there? I keep hearing about it. And at this point, it had nearly $2 billion deposited in it. Like $2 billion of all crypto money. We're all in the chat. We're just like, what do we do? What do we do? Do we sell? Do we keep going? Do we sell? What happens now? And then an article comes out.
And this is like a 16-hour-a-day intellectual inquiry. Because
yes,
I can't imagine being in that position where you have such an enormous win, but you must feel a sense of greed.
Oh,
also,
yeah.
Like I've already made so much, I'm on a roll here. Why would the good times end?
Totally. I mean, I put in 25K initially and I was up something like 30K at this point because I'd been selling some along the way and whatnot, but I'd more than doubled my money. And in my head, I'm not thinking, oh my gosh, what a win, we should get out. I'm thinking, this is going to double again. It's just going to keep going, right? Like, why would we stop now? That's sort of the constant mindset that we all had. And then this article comes out interviewing Mark Cuban. And in the article, he talks about Iron Finance. He's saying that there's all this cool stuff going on in DeFi. For example, there's this new stablecoin project called Iron that's really, really interesting. And I put some money into it. And so this article just starts going viral on Twitter. Everybody's like, he's one of us. Like, he's a degen too. This is so cool. And at first we're all like, oh my God, this is amazing. This is going to bring in so much money. And then probably 5 or 10 minutes later, we start going, wait, if a news article interviewing Mark Cuban is talking about this, this is definitely when we should get out.
So this is where the investors see that sort of thing as a signal of this is the public that are going to sign our checks, essentially.
Exactly. This is the exit liquidity. This is when the late money comes in trying to get their share of the gold rush, but really it's already been mostly tapped out, but they're going to buy our tokens at this super inflated price and we get to cash out and they'll be left holding the bag, which is kind of a savage way to put it, but that's how it works with this like very speculative side of the game. And so we saw that and we thought about it and we all said, okay, you know what? We're out. This has to be where we sell. And so I sold everything. A few of my other friends who were in it too, we sold everything. And then we kind of just like sat back and watched. And it kept going up for a little bit. It kept going, at least for a day or two. And we're thinking, do we get back in? Did we make a mistake? Is this not done yet? Is this going to keep going? And then I go to sleep and I wake up and I realize that it had dropped 50% overnight. And then it had bounced back up. But it really felt like, okay, that's got to be a sign that because this token hasn't really gone down at all over the past month. And then it dropped 50% overnight and then recovered. But like, what's happening here? This feels shaky. And then literally from that morning to basically the end of the day or the next day, it was worthless. It just completely imploded. Titan just went straight to zero because of an issue in how they had designed the redemption mechanism in the token. Everybody who kept holding that Iron USDC stablecoin only got 75% of their money back because they could only get the USDC because the Titan was worthless. It was a bloodbath. It was something like $2 billion of value got wiped out basically overnight. And it kind of put a damper on the DeFi project farming for a little bit because it was such a rough shake. The one upside of it was that when a lot of us saw the exact same thing happening with Luna, but with a lot more risk on the line because there was no 75% USDC backing it, a good number of us never put any money into the Terra USDC or Terra USD 20% fixed APR stablecoin because we had that painful experience. And I actually warned people about it on my blog. I said, this could just go to zero overnight. Like you probably shouldn't go into this stablecoin. It eventually did. And unfortunately, we weren't that surprised because the way it was designed was that if faith started to falter and everybody started selling their Terra USD to convert it back to Luna, it would print so many Luna tokens that the value of one Luna token would basically go to zero. And that's exactly what happened. That one went from 70 billion to zero in the span of 4 or 5 days, which was absurd to watch. But it was just kind of a consequence of the same game theory problem with how the whole thing was set up.
Incredible. There's so many great stories in the book that we can't get to all of them. Tell us about your biggest win. So my understanding is that your biggest win was actually developing a game and earning in tokens as you exchange your coding skills. And the story of how you exit and got audited is incredible. Maybe you could walk us through your biggest win. I think you were able to buy a house, and I won't say how the book ends, but you do have a big cash out. I'm curious, how do you have this life-changing outcome?
The crazy thing is it was kind of an accident. I was trying to get back on my feet learning the Solidity programming, and it was trying to find a team to work with. And I've always been very bullish on crypto gaming, and I'm still very bullish on it. I think that that's a no-brainer use case for crypto, is people being able to more easily transact within games and be able to pull some of the value out. Because I've just seen this story so many times with games that I loved to play, like World of Warcraft, RuneScape, Dota 2, Diablo 3.
So if I like play the game and earn an awesome sword, I could like exchange it to you within the game for money, that kind of thing.
Exactly. Yeah. Or even simpler, we're still using gold within the game, but then there's an open market for converting gold to USDC based on how popular the game is. So if you ever want to cash out your work in the game, you can do that. And I think games are going to be really incentivized to build something like that, because if I just have a crypto wallet that I can instantly connect to every game I'm playing and then instantly spend money in that game, and the game can take a transaction cut, they're going to print money.
It's so hard not to just jump ahead to some dystopian future simulation instantly. It's like 100 years from now, like, oh, man. What are our kids going to go through?
People spend billions of dollars a year already in Fortnite and Roblox with a lot of barriers to doing it. So imagine when it is just as easy as tapping a button on your phone to have your money in the game
Yeah.
and move it back and forth. I think it's going to be really, really big once a AAA game properly implements it. And I was working with a game that was trying to do an early version of it, trying to do a Diablo style game where you could sell your character, your gear, your currency, everything for other cryptos, for USDC, ETH, whatever you wanted. And they needed someone to help write the code to allow you to do that. And I was still pretty early in the journey and I didn't totally know how to do it, but it was impossible to hire Solidity engineers back then. Most of them charged absurd amounts of money. And these guys, when they hired me, didn't have money. And I asked to get paid in ETH. I said, like, look, pay me 2 ETH a week and I'll write all of your code. It'll be like a 2 to 4 week project and then you can have it. And they basically said no. They were like, we can only pay you in game tokens, which is just a hilarious way to get paid for your work. It's like, well, we don't have any money, but we'll pay you a video game currency. But I didn't have any other job prospects and I was excited about the gig. And so I was like, you know what, screw it, sure.
And you didn't know who these people were.
I had no idea, never talked to them on the phone, never seen their faces, had no idea what their real names were. It was all pseudonymous, but it seemed like a good gig and it seemed like a cool opportunity. And so when they came back and said, we can only pay in the tokens, I was like, all right, you know what, fine. I got to start somewhere. And so I said yes. And the plan was to launch this token being worth about $1 million for all of the tokens. We were going to launch 1 million tokens or 100 million tokens, the total value being $1 million. So each token would be worth 1 cent. And so when we negotiated my pay, it was based on the assumption that each token would be worth 1 cent. At the peak, each of those tokens was worth $13. So I literally thought I was getting paid $10,000 to work on this. And then at the peak, all of the tokens that were allocated to me, and I couldn't access the vast majority of them. So this was all just funny money, all on paper. But that hit like $13 million. And then you get into all of these problems around, you can't sell most of it because a lot of it's locked up and getting distributed over a year. Even the stuff that's unlocked, you can't sell most of because you'll move the price too much.
Yeah.
Any amount that you sell is public knowledge because the blockchain's public. And people are going to get pissed at you and come attack you if you're selling too much because that seems like you don't have faith in the project or you're a scammer. And then you've got this problem of getting awarded the tokens and selling them and everything being taxable events. And so I ended up having this crazy 6-figure tax bill that I didn't know about. And so I had to like scramble to cover that, and it brings all these problems with it. But in my head, I'm just seeing, oh my God, it's all worth $13 million. It could go to $100 million. I shouldn't sell now. I shouldn't get out now. We got to keep riding this thing. And that was sort of the
the climax of the book. The climax of the story is really this idea of you got a community management problem. You've got a relationship problem with anonymous people. And you've got this number that would put aside financial questions for the rest of your life right on the other side of the fence.
Yeah. And you think it's real. God, I really thought that $13 million was real. I was like, we're done. We're just done. Oh my God. I mean, just realizing what a much smaller percentage of it was actually real was quite a wake-up call.
How has this experience changed the way you think about money and work?
Thankfully, I was smart enough to take stuff off the table along the way, and I did have a really great outcome from it. I don't want to pretend like I lost everything. I didn't. It was a life-changing amount of money, and it was enough for me to be set for 4, 5, 6 years, despite living in downtown Austin with young kids and everything. And it was this question of, okay, do I fully commit to working in crypto world, try to get to those numbers that I started imagining at the peak, or do I acknowledge that this isn't making me happy? It's really draining me. It's really creating all these other problems in my life, and go all in on what I actually enjoy, which is writing. Writing is a hard profession to make it in, and a lot of people don't make much money in it, but I felt really confident that if I fully committed to it, I'd be able to figure it out and hit that escape velocity. That was a conversation that my wife and I had to have, where I said, like, look, I want to treat a good chunk of these crypto winnings as just like my runway to get the writing career off the ground. We'll cut back on our spending and we'll try not to be cash flow negative, but we will be for a while. And I'm just going to sell crypto as needed to keep funding our life while I focus on getting this new career off the ground. And that's almost the only thing I did for the last 2 years is I wrote and I studied writing. I had some fun on social media and did some other little things like that too. But 80% of my time was just writing this book and trying to get better at writing in general. You have a very similar version of this, the like 1000 days idea, which I love. And I send that to people all the time. My friend has another version of it, which is like your life today is the result of decisions you made 2 years ago. And that was an incredibly scary thing to do at the time. But 2 years later, seeing how much better I got and the book that I was able to make and all the opportunities that I can now see in front of me for writing, both in nonfiction and fiction, and how committed to this I've gotten, I'm just so incredibly grateful that I made that choice, because this is what I've always wanted to do. I'd never had the space or the runway to go do it. And it would have been easy to say, no, if I keep at this for 4, 10, whatever years, we could have that incredible exit and be fully retired, but I wouldn't have enjoyed the work along the way. It wouldn't have been fulfilling. It would have kept me in that space. It would have continued to put all this stress on our relationship. And saying no to that and really focusing on this, that's been more life-changing than the money. Just getting that clarity, getting that big financial win, realizing it didn't make me happy and that I should just go do this thing I actually want to do. I don't know what better lesson I could have gotten from the experience than that.
It's incredible. We, the readers, thank you, Nat.
Thanks.
I'll say it on wax. I read the book in one sitting.
Oh, that's awesome.
It's an absolute roller coaster ride. It's really, from a craft perspective, it's a big boy book. You know what I mean? It's up there with the big boys. It's a serious book about a little world that a few of us knew about in this podcast circle. And it's so cool that you brought it to the light so we can take a look at it through your eyes. So
thanks, man.
We appreciate it, Nat.
Dude, that was the goal. It means so much to hear that. I didn't want to just try to make something that would like just be for my email list or just for some crypto followers. I really, really wanted to try to like write a big boy book.
Nat, thanks for coming by the Tropical MBA podcast.
Thanks so much, Dan.
And good luck with the book launch.
Thank you.
Hey, thanks for listening to the Tropical MBA podcast. You can go to tropicalmba.com, get access to hundreds of back episodes and all kinds of other goodies. Load up your iPod. That is the cheapest way to fly business class on your next international flight. We will see you next Thursday morning, 8 a.m. Eastern Standard Time.